morning, or good afternoon, or good evening, depending on what time of the day you're getting on this. It is Sunday, April 23. I just had a nice downpour of rain that lasted about 10 minutes, and I am probably one of the happiest people on earth because it was 98 degrees today. So, in any case, I'll get right to it. Not going to waste your time so that you guys can go and get about your business. Eddie Van Halen's Hot for Teacher guitar sold for $3.9 million at auction this weekend. For those of you that were lucky enough to have grown up during that era, Hot for Teacher and everything else that was with it, an absolutely amazing time to have been alive. That is the reason why I have that cover of Van Hagar on the video, which is when they did their album 5150. 5150 refers to the California law code for the temporary involuntary psychiatric commitment of individuals who present a danger to themselves or others due to signs of mental illness. It has been more generally applied to people who are considered threateningly unstable or crazy. That would be all of us, because we have just completed our 4th week of absolute nothingness, where range, since we hit that 3909 on March 24th, the range on the SPX, the reason I put the 30s in blue is to tell me, okay, this was a nothing day. I put the under 30s in red to tell me, hey, hang on a second. Was there a holiday? Was the market closed for half the session? But no, that's what we have had for 4 weeks. And I'll bring you onto the charts, obviously. But last week, we broke 30 points once on Thursday. Once. And as you guys know, we closed the week red. We were down 2 points, 2.5 points, 3 points, whatever the fuck it is. Who gives a shit? We were down 3 points. Unbelievable. Anyway, as you guys know, trade of the week did pay out greater than 200% as we were looking for an entry of at least 3%, $3. Started out at $2.50, got up to $3.65 and was trading above $3 3 days during the week, Monday, Tuesday, Wednesday, and closing at 41.33.52, $1.48 below that short strike. Full credit. But kudos to every one of you who took the trade off early, regardless of the closing price that you got on the trade. This was a headbanger of a week, and I could not have stressed more how it could have gone either way, but it wasn't going to be breaking down, because especially there on Friday, we had the 20-day moving average was above where the minus 1% level is. So we now have 19 trading sessions. I don't really want to bore you and waste too much time on it, but I did take the time to go back to COVID. And right over here in November, going into the end of 2021, when we were hitting the all-time high, oh no, I'm sorry, yeah, right there we were hitting the all-time highs going into December. Many of you remember when we had that October, we had that major rally in October after we had that dip down to around 42.30, 42.90. And we just went straight up into a catapult during that October. Well, from October to November, we had 24 trading sessions without a minus 1%. In September, we had 20, and we had 14 over in August, 12 in July, 18 in June, 21 back in April, coming off of March. And again, this is where we start coming into where things are a little easier. We're back at 39.50 over here in February 2021, 12 sessions. 2020, 35.88 over here. I remember that. There was 16 sessions. That was a great short. And yeah, going all the way back to COVID, there were no streaks that we had since going back to that October of last year. So sorry for scrolling, and just want to get back to my starting point in case I need to come back here. Guy asked me, yeah, can I get a track record of what your spreads are like? I'm like, well, we're green this week every day. Yeah, but I want to know history like a year, 2 years. I said, well, fucking, what does 2 years have to do with tomorrow? Tomorrow I could be wrong for the next 8 days. So this week is incredible. It is absolutely incredible, and I was wrong. I was wrong. I was wrong. I was wrong. Microsoft and Apple are on Tuesday. Facebook, I'm not calling it the name that it is. Facebook is on Wednesday. Amazon is on Thursday. There is no Apple. We don't have Apple this week. Typically, Amazon and Apple report together. So I automatically thought that we were going to be getting Apple and Amazon on Thursday. We don't. It's the end of the month. So this is the final week of the month. And again, to bring you back as to where we're at and how ridiculous this is, we have gone 99 points this month. That's it. 99 points. So I'll bring you over to a spreadsheet that Suresh has shared. And we're at 99 points here in April of 2023. Now, in November 2021, we did trade only 184 points. In August of 2021, we did trade only 169 points. How does he have this taped? Because I'm looking here at 12/20/20. Maybe there's something amiss. I'll have to go back and look and make sure. But yeah, December of 2020, only 126 points. Again, you get the point here where, I mean, we're looking at a very large missing piece, having traded only 99 points for this month. So, yeah, I'll start you out with the charts, but first thing I want to go over here is last week. Last week, NASDAQ, Tesla, after earnings, down 11%. Amazon had an amazing Friday. Google, Facebook, down 3%. Microsoft and Apple, absolutely nothing. Nvidia, 1%. Somewhere, Netflix, down 3%. Now remember, Netflix reported earnings. Tesla reported earnings. I don't know where I could find it here on Lockheed Martin, but it doesn't matter. Lockheed Martin, big spike off of their earnings, and then they faded off, dropped off as the rest of the week went on. So we got a little bit of a problem this week because I'm sitting here with the trade of the week ideas, and we're literally 51-50. We have a 51% chance that we go down. We have a 50% chance that we go up. Now you do the math and you go 51 and 50, that doesn't make sense. Well, it's a CNN poll. So there's a plus and minus one out there somewhere. So Microsoft, right up here at this main resistance area, this 290, and just been curling over. You can see just the absolute sell divergence that's been over here on the RSI, but zero commitment whatsoever to make a move to the downside. You have earnings coming out on Tuesday. Strength indicators of your MACD and your true strength, they've been negative for 2 weeks already. Come over onto Google, and Google not as bad, but obviously at very clear support resistance. 108 was your pop over when you had your earnings last time, and then your big fade after that. Strength indicators, MACD, true strength, blah, blah, crossed over, very bearish, a little bit more than a week ago. Meta, fuck, I said it. Damn. Facebook, an absolute piece of shit. And this thing has gone from 88 to 222. And you're going to tell me that this is because you think that if you ban TikTok in Wyoming, that all of a sudden everybody in Wyoming is going to go on Facebook and go, I can't get TikTok anymore. I'm going to go on Facebook. Jesus. Incredibly overbought for months during the course of this year. And this little tiny move from 222 to 212 has almost oversold the fucking daily. And that's the problem that you have when you have these weak, slow ramp ups that don't go anywhere. They don't drop, but they don't go anywhere. Your strength indicators start to fade off. You can see here, this has been crossing negative for 2 months already on your MACD and on your true strength, and you're not getting the price action. Earnings, let's see, because back in April of last year, when they reported their earnings, this took a shit 60 points. So fuck Zuckerberg. Amazon, absolutely fantastic day on Friday. It's not been horrible. That 88's been great. Nice little grind up move right up here at this resistance area here at 104. Very clear to see you're very overbought over here on your daily. Nothing to see on your negatives because, again, all we're doing right here is we're looking at charts because the earnings are coming out. And like with Tesla, sell down that quickly and you're going to get, it's going to come back at you. So I'll show you Tesla in a little bit. So here's a Dow Jones trolling on this 34,000 for quite a few days, getting ready to cross negative over on your MACD and on your true strength indicators. But your daily, as we were overbought on that daily, as we were going into the end of March, continuing to be overbought just until earlier this week, and very quickly, tiny little drop of only about 1% over on the Dow. You've already shaved off half of your RSI. RSIs are very important to be looked at, and I'm looking at a daily here, not looking at like the warnings I was throwing out in the alert room on Friday about the NASDAQ being extremely oversold on the 4-hour. Come on to the NASDAQ, and here we are at the NASDAQ. This is your August highs, well above where we are. And everybody wants to talk about chart patterns and say, yeah, this is a perfect inverted head and shoulders. And yeah, you're heading up here. And, it is. Again, true strength indicators with your MACD. And over here on your true strength, been cross negative for weeks. And while we're on here on the NASDAQ, I'll bring you over here to the Commitment of Traders report. And this I'm looking at here is the ES. And very fractionally, the market makers are starting to get a little bit bearish. Fractionally. Now, over here on your leveraged funds who have been short, I'll zoom you out. We'll go out 3 years. And let me see if I can zoom this in. Yeah, I can. Your leveraged funds down here, they were, prior to last week, they were as bearish as they have been for greater than 3 years. Come out, 5 years? And yeah, you can see here how your leverage funds have been bearish, but you can also come out and see how you are starting to get fractionally bearish as you were over here in June of 2020 with the market makers, which didn't pan out on the charts, but the market makers are starting to slowly start making a move on a more bearish point of view as they were over here in September as we were going into the lows over there in October. So again, we're trying to find needles in haystacks with what we're looking at here because we've been going nowhere and we've been banging on that big resistance. NASDAQ, again, looking at where we're at, it comes down with those 4 big weight names that are going to be reporting this week, and you could flip a coin for 13,800. You could flip a coin for 12,180. Well, excuse me, and the SPX, and this is your 4,100 line. This is your 3,850 line. You can see how you've just constantly had problems as you've been above 4,100. This is your August highs over here, and you've obviously got your sell divergence, which was in place coming over here from the pop right there into the beginning of, or the end of the month, into the top that we just placed over here. Just doesn't beautifully fit with the full moon, but I'll go over the full moon in a little bit. And again, MACDs are crossing over, true strength indexes are crossing over, which is signals, but we need, with a 90-point range, we've got nothing that we can actually take aggressive action with other than putting stuff out there and letting it play out when it does. And it will. IWM. So again, here we are in the IWM where it's the weakest link of all the weak links, and it's doing absolutely nothing at the moment. And pretty much all of your regional banks will have been reported by the end of this week. So again, with this, if we're looking at 180, that's basically our alarm. Anything above 180 should have a positive effect over on the SPX. Anything down below 172.50, and we should start seeing more dependency be on the NASDAQ, where your four names are going to be coming out and reporting, and we'll go from there. So this is what I've got at the moment for the trade of the week. A bearish view of buying the 4160 calls for Friday and selling the 4155 calls. Now, we've traded these multiple times during the course of last week. Monday, got 35%. Got 150% on Tuesday. Got 100% on Wednesday. Didn't trade them because they were too far away on Thursday. And then your trade of the week, the 4140, 4135s. Now, from a full moon point of view, again, I have always gone with the high. And this was your full moon. The 4163 high was there. But you've had a higher high over here 7 sessions later. And in all of my tracking of the full moons, there's never been one greater than 4. So that leaves, again, being it with a coin flip of this week, an open door where this could be the trade of the week. Buying the 4130 puts, selling the 4135 puts, and looking for a close above 4135. And again, I'm not 100% confident on this. So I will look back here and look at Netflix. And you've had your run on Netflix over here from May, over 100%. And then after your earnings were reported, you can see you've got your little bit of a fade off. Nothing incredible, but you have your fade off of Netflix. And then we go on to Tesla. And with Tesla, having reported, having hit 208 multiple times, being that very clear and strong resistance, now you've got your move down here to this big 165 with a big gap down over here from Friday, and you're very oversold over on your RSIs. You don't have buy divergence, but you're oversold, and you're on this big 165. So then this comes into play that I'm looking at saying, buy the 165 puts, sell the 167.50 puts, $1.35 on a 250 spread, a little bit better than 100%, but I'm not 100% confident in it. So we come back over onto the charts, and here we are looking at a 20-day, the last 4 weeks since that 3909. Here was your move off of your 3909. Then you had your gap ups there in March, and we went there. So what I'll do for you here is go ahead and make it even more simple to see. And this is your March 1 to now, 30 minutes. This is our entire month of April. You've got very, very little to work off of when you're looking over here at SPY. Come over here onto your SPX, and again, you got the same thing. Got your little tiny gap up here to be filled from over there last week. You're up 6.66%. Ties in with 5150 with the theme. From that 3909, you've got your March 29, March 30, March 31 gaps. And then again, same thing. We can go ahead and zoom this in so that we can get a clear view and everyone can understand what we've got going on. And here we go, and we'll do it on the 15-minute. And this is the entire month of April. Nice big move off of that 4069, 99 points, and then this fade off here over the course of this week. So very, very, very boring as it goes. However, I will make it very clear and very well known. We do have 2 gaps that are up here from August. Using that 4069, these are well within range to be filled. So with this being the end of the month this week, this is not off the table. A move up to 4266, 4284. It is not in any way, shape, or form deleted and removed. Microsoft and Google on Tuesday will give us a very, very good idea as to whether or not that will come in play. Therefore, I would rather wait until after Google and Microsoft report on Tuesday before issuing out the trade of the week, because I am at 5150. I am 51% sure we're going to go down. I'm 50%, I don't even know what the word to use, but yeah, there's 50% of me thinking, yeah, we could go up there. And it's all going to come down on earnings, because what happens here with earnings then moves over to the FOMC meeting. And these arrows are your FOMC meetings, okay? This is what happens on your FOMC meetings. And as you can see, they are pretty dramatic, and especially the more recent ones. This was our last one over here back in March. What was it? Did we have an FOMC meeting here? Yeah, this was your FOMC meeting here. I don't think this was here. Yeah, this was. We had that tiny little point. So we have another one coming up here in May. Okay, we have another one coming up here in May, on May 5th, and on May 5th or May 3rd next week. We also have the full moon coming up on May 5th. We also have Apple reporting next week. And here on your blue line, you have your 400-day moving average. Now, the only thing I can bring this into context with is back over here in August, how I remember very, very clear. Back in August, we made contact with that 200-day moving average for a total of 1 minute before we had the sell down initiate, where we went down to the October lows. This was the 400-day moving average, and we were up above it for a few days. And for very obvious reasons, because it's a very long moving average, it was never even in play during the move down over there in January, February, March of 2022. But we're making contact with it here. We missed it very fractionally over here when we had our high over in February, but right now we're making contact with it. So that is, again, something else for me that when I'm looking at it thinking, because of where we're positioned, because we are depending upon these large four-weight names to report, how Tesla, how Netflix, how Lockheed Martin that put in new 5-day lows today or on Friday after their big report, new all-time highs. We also have McDonald's that's reporting that's at new all-time highs. We also have Chipotle Mexican Grill that's reporting. Boeing reporting. This is a very, very big week, and I don't see anything. And again, coming here onto the QQQ, which is the legs of the market, we can't get below this 313. 313 has to give up for any sort of view for that 3,900, 3,800 area on the SPX. It ain't gonna happen until that 313 gives out. And with that 313, move on up. This gap is not completely filled from August to 323. And you have another gap up here from August that goes all the way to 330, which in the beginning of the year, I said I would expect to see QQQ up in the 330s later in the second half of the year. We can easily be in the 330s this week. So again, it all comes back to where we are and where we've been, and how it's all coming down to those guys that are reporting this week. And I got to leave you with a very, happy wish that you enjoy your Sunday. But as far as going into this week with a dedicated view, my hands are up in the air, and if I'm going to say something confidently, I'm taking a 51-50 chance on it. So we let Microsoft, we let Apple report over here on Tuesday. Come Wednesday, we've got a much better idea, and we already know where our range minimums are. We can start to look out from Wednesday into the end of the week, start heading into the FOMC meeting next week. So have a fantastic Sunday. Again, it's one of those things that at least what you can get out of this today is that you know that you're not going to be going into Monday aggressively anticipating to start pushing buttons. We can do our spreads, SPX spreads, but come Tuesday, the end of the day on Tuesday, we're going to find out what's up and what we got. So have a good one. See you guys in the chat room.